All right. So the Fed just cut the rate again, just made their announcement. It's funny, I actually got a phone call from one of my clients that's currently under contract. And that's a great question. But they asked, hey, Josiah, now that the Fed has cut the rate by a quarter point, will I see that quarter point lower on the interest rate that you'd quoted me? And the answer was no. And I explained to the client, I'll tell you exactly what I told him. We've talked about it before, but when the Fed cuts their rate, they are really dealing with the overnight cost of lending money. So the Fed controls things like your credit card interest rate, car interest rates, HELOC interest rates, but not necessarily mortgage rates. Those really are tied to 10-year treasury yields, the mortgage-backed security market, the cost of longer term lent money. But it's a great question. And I think that it's something that's out there for a lot of folks. And so if you're in the market, right, if you're house hunting or if you're trying to see about maybe doing a refinance, the last thing you want to do is be pegging your decision on what the Fed does. Because oftentimes, and actually what happened is that the mortgage rates can move the opposite direction of what the Fed does. And that happened. While Jerome Powell was giving his remarks after the actual rate cut, he had some comments that were deemed a little hawkish or negative towards future rate cuts. And as a result, mortgage rates got worse. Most every lender had a negative pricing move in the afternoon on the day after the rate cut by the Fed. So it's important to stay in close contact with your loan officer. We are paying attention to the right price movements, to the right economic indicators that will give us an understanding of where mortgage rates are heading, and we'll go from there. But yeah, if you have any questions, I'm always available. Give me a shout. If you're a realtor out there and you would like to understand more about this, let's set up some time to chat. But the best time to buy a house is and always will be when you're ready. When you've got your credit in the right spot, you've got your assets situated, and the income supports a healthy DTI for you to get into a house and still continue to live your life. So again, my name is Josiah. Hope you enjoyed this video, and if you need anything, let me know. Thanks.